In your career, you've done a lot with the ETF business, back to your Claymore days and everything else. I wonder if you could give us a little bit of, I guess, an idea of, in that kind of decades-long span of fund management and ETF activity, where you think we hit the real interest catalyst in having options-based strategies as part of ETFs. Was there a certain era, time frame, if you will, where people started to move a little bit more away from straight up dividend paying stocks and those income strategies to ones that were more focused on the use of derivatives to generate some of that income as well? Was there an approximate time frame, and what actually really got it going?
Yeah, Dom, I think it was about 10 years ago, roughly, that option income ETFs started to come on the scene. You saw ETFs like QYLD that were option income ETFs on the NASDAQ 100, kind of formulaic index products. In 2016, we launched our first product, Devo, which was the first actively managed option income ETF to write options on individual securities. For a number of years there until about 2019, there wasn't a lot of interest in the space. And then it really exploded with a variety of sponsors. And I think it was basically the recognition that options can be another tool in this total return equation. Most income investors up to that point in ETFs only looked at dividends and didn't think of writing options to generate option income. Indeed, there's maybe even some legacy issues with leaving too much capital appreciation on the table, and many have been burnt with covered call funds, specifically in the closed-end fund space. And I think the ETF space is always innovative, and they came to the table with a number of unique solutions that hadn't been done before in the closed-end fund space or in the mutual fund space, and we're able to kind of find a unique recipe that attracted investors. Unfortunately, I believe, Dom, it's kind of jumped the shark now. When you see some of these yield chase or yield gamble type branded products that have over 100% yields, then you look at their total returns and they're down 70%. I think we've gone too far as an industry in some cases, and we're happy to stay in our lane at Amplify in the yield smart approach, diversified exposure that again balances capital appreciation with attractive income and tries to navigate that eye of the needle, which is not always that easy and really requires great financial advisors like Nick and his firm to do due diligence on the ETFs, but also understand clients' risk tolerance and time horizons. And that's a valuable service in an era where we have nearly 5,000 ETFs in the market today.
It's an interesting cautionary note from a guy who actually runs a firm doing options override strategies to say that maybe we've jumped the shark on some of these options override strategies. Christian Magoon at Amplify, thank you so much for the conversation. And Nick Ryder at Cathmere Capital, thank you very much as well. Fascinating. I wish we had more time. We'll have to continue this at some point. Now, we've asked Nick to stick around for the ETF Edge podcast. You can catch that and all of our other content over at etfedge.cnbc.com. Thanks for watching. We'll see you next week.